Let's start with the Trump assassination attempt because it is very important. Former President Trump and current favorite to win was wounded in an assassination attempt this weekend. Goldfix reported this event to subscribers in 3 event covering posts. As horrifying as it is, as unnerving as the implications are in this space, we will only discuss it in context of market effects and political effects that have effects on the market. Not only is it imperative to remain objective as an American for us, it is also better business as the knock-on effects of the event open a door to many global black swans.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and today we're going to break down Michael Oliver's latest gold and silver comments, as well as a comment about the Trump assassination attempt and how it will or could affect our markets. First, let's look at those markets. The dollar is up 6. 10-year yields are up 6 as well at 424. The S&P 500 is 5636, up 21 handles. The VIX is 1283, up 38. Gold is up $7 at 2417, near the recent highs. Silver is 3076, down 2 cents. The gold-silver trade is going on. Sell silver to buy gold. Copper is down 40 basis points at 456. WTI is down 14 cents at 82.17. Natural gas is 220, down 6 cents. That's almost 3%. Bitcoin, very strong recovering weekend, 62,499, up 1,700 this morning. That's from a low of 58,000. Seems like the Trump assassination attempt was a low. Ethereum, 3343, up 96, up 3% as well. Platinum, palladium are both slightly higher. 965 in palladium, 10,001, 1001 in platinum. Grains, I think, are all down. Yes. Grains are down, not uniformly, we'll call it acceleratedly. Soybeans are down 1.5% at 1094. Corn is down 2% at 3.87. And wheat is trading 539, down 2.8%. All right. Whoops, that was a mistake. All right, let's dance. Here we go. Michael Oliver every weekend, I should say, puts out a report called the 360-degree weekend report. It covers major markets, and the technical aspects of it are focused on the things that are closest to triggering or things that he thinks people are most interested in. Big portion of it this weekend was on equities. So we're at a turning point in equities, he thinks, possibly. There isn't really much new to add about gold and silver, but he does not neglect those assets at all. And he has a nice, almost 2,000 words almost in long form, describing the chronology, the prices, and where we are. I would not call it hand-holding because things are going well. I would call it a touching base, making sure you have your ducks in a row before the next leg, because the next leg could happen fast if I'm reading him correctly. Okay, so taking stock of gold and silver is what that'll be called. The commentary, Trump assassination attempt implications. I want to lead with that, but let's look at the front page. All right, this is the End the Fed book by Ron Paul. We sent it out to founders. We got a copy of it, and we sent it in PDF form, in original PDF form. On Sunday, we had the Sunday Founders Meeting for everyone. That meeting was a discussion of CFTC reports, which the reports were neutral to slightly bearish, but the behavior all week was very bullish, so we didn't really care about the reports that much. Well, you can listen to that. We also discussed at length the similarities between gold, oil, and Bitcoin, and how they're all spoofed lower and why they're spoofed lower and what the mechanism is of it. I think that's very interesting if you're looking for parallels between markets without actually saying the assets are the same. And then we have the report from last week that we broke. The China Hunt brother, Bian is his first name, Bian, takes on JP Morgan and wins. All right, so that's that. Let's start with the Trump assassination attempt because it is very important. Former President Trump and current favorite to win was wounded in an assassination attempt this weekend. Goldfix reported this event to subscribers in 3 event covering posts. As horrifying as it is, as unnerving as the implications are in this space, we will only discuss it in context of market effects and political effects that have effects on the market. Not only is it imperative to remain objective as an American for us, it is also better business as the knock-on effects of the event open a door to many global black swans. Specifically, what do we mean by that? Well, Trump getting shot and surviving removes uncertainty in the immediate aftermath. His chances of beating Biden go up. His chances of beating anyone that goes up against him go up. His chances of, well, he's a lock as of Saturday night, okay? That is bearish gold. It's a removal of uncertainty, and we said as much Saturday night and Sunday morning. That's the immediate reaction, and gold did open weaker last night. Now, it's higher sooner than I thought it would be, but it is higher. Further, now we go to the uncertainty part. When an event as that, such as that happens, and the powers that can be prepare for the aftermath, they can prepare for it, like when the markets open Sunday night. That means they will be on alert and make sure things remain as normal as possible, at least out of the gate. A spiking gold price means America is unstable now. If you have doubts of this, look at what gold did the night Trump won the election in 2016. It spiked and then immediately got completely obliterated, okay? Events need to not attract attention to gold. However, this is the uncertainty part. Moving forward, things just got a lot more uncertain in the intermediate term, as mentioned above. Intermediate for me is from now through January 7th of next year. How will the Democrats react to this event? How will Trump react? How will the RNC respond to Donald's response? How will adversarial nations act? How will trade partners who have much to lose act? How will Biden act? We've already seen some of that. All things to watch for. The world is now triggered by things like this. One thing this does is it puts the power of change, both positive and negative, in the hands of individuals again, as opposed to a collective or the state. Okay? Individuals like Trump, not just Trump, but like Trump, are in a position to lead, and people will likely follow, even those that are not his friends, however they direct. Think about what happened on 9/11. This isn't 9/11, but this is a catalyzing moment potentially. People don't know, some people don't know what to feel after events like this. Think of a moderate person on the left. And those in power can lay out that path, whether it's someone on the left who's calling for sanity, or Trump calling for sanity, or either one calling for an escalation of behavior. Okay, this is the uncertainty I'm talking about. For that reason, things just got a whole lot more uncertain for the next 6 months. Pretend a door has been opened to a room full of black swans. Some of those black swans are bullish for gold. Some are bearish for gold. It depends on what individuals do now. And that makes events all the more important. It's in the hands of an individual who steps up. And that could be Trump if the RNC conversation is anything like that. Anyway, that's what we have to say about it. So we will look at markets from that point of view. Moving on to Michael Oliver. Michael Oliver has 2 sections of his report. One says gold's long-term momentum has already spoken. Nothing more to add. Price now speaks. His analysis, just to give you a quick background, his analysis is very momentum-oriented. Momentum leads price. Momentum says, okay, we're going to rally. And then he looks for price to confirm it. I believe, this is my understanding, and price confirms it. Then momentum has done its work, and now he looks at price and he looks for momentum to possibly do its job in a certain time frame or wane. Very similar to how I trade volatility. All right. So that's what he means when he says long-term momentum has spoken. It's manifested. It's asserted itself. There's nothing more to add. There's no more indications to give. There's only action to be realized. So it's very definitive without being cocky. So what does his report do on gold and silver? It explains where we are. It retraces the steps of how we got here using price action and chronology. A little bit of a history lesson going back to his previous report analysis. It describes that given the current lay of the land, where we are going. He doesn't put a fine target on it. He just puts more inflection points in there, and it gives perspectives. Here are a couple of choice quotes. Now, we will do a full independent write-up of this section of the report for later today for premium subscribers. And at the bottom of this conversation, of this, there are more choice quotes and a little bit more detail as to what he's saying. So we're going to give this 2 posts of attention today. We're not going to discuss too many of his charts or his equity and bond comments, which I think were very astute. It's kind of scary when you agree with someone from a different perspective so frequently. You're probably both either going to heaven or hell together on different planes. All right, so here we go. Quote number 1. I've just pulled a couple quotes out. Gold's long-term momentum trend factors have since had nothing more to say. Just a chorus that argues the acceleration phase of this now 8.5-year bull trend has begun. So initial in 2016, and then points along the way. And then you could see basically what you're looking at here is the triple top that people talk about and how we're above it. So there's your consolidation. There's that chart. Where we are and where and when we are likely going from here. MSA offers only one further level to watch. When gold clears, notice he says when. I like that. When gold clears 2,500 by some credible amount on a monthly close, we expect to see this already evident acceleration action take on an even steeper and more rapid angle of ascent with a dramatic price outcome in the next few quarters. So we pierce, this is as fine as you can get without lying. Someone starts telling you if it gets above this price, we're definitely going up. This is professional technical analysis. If we close above 2,500 on a monthly basis by some appreciable amount, how much? He'll probably decide that when we get there. Indicators have to help you with that. When that happens, you'll probably see an even steeper acceleration. So it'll go from, from linear to exponential, geometric. That's how it goes. And, there's more on that at the bottom with regards to that. Now, before we start on silver, I want to make a comment. For the first leg of the rally through May, I would say, through April to May, this has been a gold bull market with silver being used to finance gold purchases. That's me discussing behavioral flows. People go out there, players go out there and say, I need to buy gold because central banks are buying gold, and central banks were buying gold. So those people who wanted to speculate long gold or had to cover gold shorts would sell silver to finance it. That's traditionally how banks will, believe it or not, how banks will trade one against the other in order to facilitate keeping both in line. All right. Now, that had been very successful since 2016. I was long silver in 2016 because gold was rallying, and I just did not perform. It did not perform, and neither did I. But since April, May, silver has changed its tenor. It has also broken out, and he goes into this a little bit more at length. The reason I'm bringing this up is because in a normal, healthy precious metals market, silver leads gold. In a precious metals market that's bifurcated because people want gold because they're central banks, or 93, was it 93, 97, when Buffett bought silver rallied and gold did not. When they bifurcate, that's not healthy as the market goes. That's just one commodity being singled out. So for the last 5 years, at least, gold has been singled out, but now they are on the same page, is what he's saying. And I'm saying that as well. They're on the same page, which means where gold goes, silver will outperform. That's my take. So I'll give you a little bit of what he says to that effect. Congestion from the early 2021 high to this year has finally ended occurring in April. There you go, April. I said May, right? In April. Now, this chart here, I think this is why don't I just read what he says? I know what these are. I want to get it right. We strongly suspect that if gold does move into the 2500s, as mentioned above, fully taking out its recent horizontal highs, then silver will also likely punch out its 32.75 high of late May. Upside price drama will likely become the norm then. Right? And he describes this with several charts, but the chart I think is easiest to understand because he doesn't give you a target in silver. He didn't give you a target in gold either, but to give you an idea of the price target in silver, the gold-silver ratio, the way he measures it is as a percentage, and silver is trading roughly 1.3% of gold. With gold at 2,500, if the gold-silver ratio goes to 2.5%, 2.5 to 3%, which he thinks it will easily do, 2.5%, I think he says is easy, then you're looking at gold trading 2,500 and silver trading $61 or $62. Okay, so if they're linked up, as I say, and as he agrees, then the next leg higher, if/when it comes, will be possibly gold leading for a day or two, and then silver just taking off. I believe in that. There are more choice quotes in premium. That's all we can say, except that momentum has been indicating price should move to X or through X, right? Price has moved through X. There has been no negation of that momentum. There's no backtracking. There's no, okay, we're done, right? So he thinks an acceleration phase is upon us. He also talks about GDX. We're not going to get into that right now. I do have a long GDX, long gold, long silver, and long bonds position. So there's my position. Moving on, there's a lot of market news. I'm not going to touch on it today. The data this week, it's a deceivingly busy week. Fed speaks today. There's data today. There's data tomorrow. Housing starts on Wednesday. LEI is on Thursday. Fed President Williams speaks. The events this week are the RNC convention, right? The 15th to the 18th. Okay. I think Trump speaks on Thursday, so that could have market moving behavior, especially on commodities and obviously on stocks. You also have China. Where I have that. China's plenum is this week. It's I think it's for like 6 days. You could have economic news coming out of China that will drive China's economy, which will affect us as well. Plus, they're doing a South Sea naval drill. Looks like throwing some bait out there with Russia against, I don't know, probably Korea, probably South Korea, probably Taiwan. All right. And there's the quotes. There's a couple more of those. Again, we have some more choice quotes. We don't have the full report from Michael. We're also going to take what he wrote and I'm going to break it down and write it so that it's accessible to premium subscribers later on today. I'm Vince. Have a great day.
Well, thanks for tuning into today's Markets and Metals with Vince Lanci. The show is brought to you each day by Miles Franklin Precious Metals, who we encourage you to consider for your next gold or silver purchase or sale. Miles Franklin has pricing that's among the best in the industry on most products, and Arcadia is proud to be a licensed Miles Franklin representative and happy to help whenever you have questions or want to place an order. Where this week's specials include 2024 Silver Eagles from the U.S. Mint for only $5.95 over spot, and 2024 1/10 ounce Gold Eagles for only $39 over melt. And of course, you can find out more by calling us at 833-326-4653 or emailing arcadia@milesfranklin.com. Happy to answer any questions you have, give you pricing on other products, and help you get set up with whatever you need. So thanks as always for tuning in, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.